It is a Tuesday morning, chai in your hand, and the house feels calm until your phone vibrates with an IRS email titled Notice of Penalty about a foreign account. Your heart drops when you see $16,000 because you never stole anything. You just kept savings in your home country and forgot reporting existed under US tax law. Most people either freeze and hope it vanishes, or they pay immediately, and both reactions can make the final outcome far worse, especially if you are filing for green card. In the next minutes, I will explain the rules, the deadlines, and the safest path to fix mistakes before penalties and immigration damage stack up for you and your family. Welcome to US Policy Brief. I am Fernando, and I focus on clear guidance so you can act early, document everything, and avoid panic decisions when the government contacts you. This video is general information, not legal or tax advice, because your facts matter, and you should use a qualified professional for your case if you already received a notice. Now let's talk about the trap the IRS expects immigrants to misunderstand, starting with the famous $10,000 threshold that is easy to misread when you have multiple accounts. The rule is not about one account today. It is about the highest combined balance across all foreign accounts at any moment during the year, even for a single day. That means small accounts can add up, like a checking account, a savings account, and an insurance policy, and suddenly you cross the line without realizing you triggered a report. Once you cross it and fail to report, the next surprise is that the IRS may already have data from your bank overseas, because international reporting systems operate quietly now. Many families think 10,000 means you must hold 10,000 cash, but the law uses the peak value at any point, not your end balance after bills and transfers. If you had 5,000 in January and 6,000 in February in different accounts, and the totals overlapped even briefly, you can be reportable under the FBAR reporting requirement. The IRS does not care whether the money is for your parents, for property repairs, or for emergencies, because reporting is separate from permission to keep it or spend it. You may also have signature authority on an employer account, a family business account, or a parent account, and that authority can create reporting duties even if funds aren't yours. The safest way to calculate is to gather statements, identify the maximum balance for each account during the year, and convert using treasury rates, then add peaks on same date. Most immigrants do not track that way, so they underestimate, and they only learn the truth after a penalty letter appears when systems flag your name and match foreign records. That is because foreign banks now report to the United States under FATCA, which means the IRS receives balances, names, and identifying details for many accounts you thought were invisible. Once a bank reports, the IRS can compare the data against your tax returns, your FBAR filings, and your citizenship timeline later, and it can ask why you stayed silent. Do not assume the IRS is looking only for rich people, because automated matching finds ordinary families with modest balances every day, especially when several small accounts cross 10,000. So the first protection is awareness, and the second protection is acting before the government contacts you, because timing changes penalties dramatically through programs that reward voluntary disclosure and cooperation. In 2026, the IRS is using analytics that scan foreign reports, compare addresses, compare social security numbers, and create risk scores that prioritize who gets a notice in your mailbox. FATCA works because foreign banks sign agreements to identify U.S. persons, including citizens and green card holders, and then transmit account data through secure channels to IRS and Treasury annually. Some banks tell customers they comply, but many customers never read the notices, and they assume their local account is nobody's business until a penalty letter proves it is otherwise. When the IRS contacts you first, it can interpret the failure as willful, and that triggers much higher penalties, and sometimes criminal exposure depending on patterns and what you sign. That is why voluntary disclosure matters, because it shows non-willful behavior, and it often opens the door to reduced penalties under streamlined programs before you are under investigation or examination. Please understand, this is not about hiding money. It is about reporting accounts, and a reported account can still be perfectly legal to maintain for family support or emergencies abroad. The bigger risk comes when unreported accounts also generate income, like interest, dividends, or rent, and that income is omitted from returns, because income rules apply to citizens and residents. Many tax treaties prevent double taxation, but treaties do not erase reporting duties, so you still file the forms and claim credits properly with Form 1116 or other allowed mechanisms. If you are unsure what counts as an account, remember that insurance policies with cash value and some retirement plans abroad can also be reportable when held through an institution. So, the message of this section is simple. The IRS has data, it uses technology, and you must assume visibility when planning compliance instead of relying on myths from friends. Now let's connect taxes to immigration, because this is where a financial mistake becomes a citizenship problem for many lawful permanent residents and naturalized citizens who file N-400 in 2026. Naturalization requires good moral character, and USCIS looks closely at tax compliance, including whether you filed required returns, paid what you owed, and reported accounts that law says you must. The N-400 asks questions about taxes, and your interview can include follow-up if transcripts show missing filings, unpaid balances, or inconsistencies between your answers and IRS records in earlier years. If you fail to report a foreign account and then answer no under oath, that is not just negligence, it can be treated as misrepresentation, which can lead to denial. Even if you do not lie, an officer may view repeated tax non-compliance as a character issue, and that can delay your case for months until you show corrected filings. For green card holders, severe tax fraud allegations can also trigger deeper scrutiny of admissibility and removability, especially if the facts involve deliberate concealment or money movement tied to violations. This is why the best time to fix foreign reporting is before you file for citizenship, not after USCIS asks questions you cannot answer, because your documents should be ready. If you are already a citizen, tax penalties still matter financially, but they do not cancel citizenship unless fraud was involved during your naturalization process and proved through a court. However, if you sponsor relatives, USCIS may look at your tax history to confirm you meet income requirements, so compliance still protects your family during affidavit of support at NVC. Treat foreign account reporting as a tax task and an immigration safety task, because paperwork in one system can change outcomes in the other when agencies compare records across years. Let's talk about FBAR clearly, because the name sounds technical, but the action is straightforward. You file FinCEN Form 114 online, not with your tax return through a separate portal. The deadline is April 15th each year, with an automatic extension to October 15th, so you do not need to file a special request, but you must submit report eventually. FBAR applies when the combined highest balance of your foreign accounts exceeds $10,000, and that includes joint accounts and accounts you control even if money belongs to family. If you miss it, the penalty for non-willful violations can reach $10,000 per year, and the penalty adjusts with inflation over time, which is $16,000 appears now. If the IRS argues willful conduct, penalties can be massive, and prosecutors can consider criminal charges, so you should never guess about intent when responding to a notice or request. For honest mistakes, disclose before the IRS contacts you, because streamlined programs reduce penalties when you certify non-willful conduct and file corrections promptly, including amended returns and FBARs for years. Streamlined filing is not a single form, it is a package, and you must follow instructions carefully to avoid disqualification or triggering a full audit because errors look like concealment. If you are unsure whether you qualify for streamlined procedures, do not DIY with random templates, because one wrong certification can create bigger exposure than the original non-willful reporting mistake. Instead, ask a credentialed professional about your fact pattern, the years involved, the account types, and whether you also need Form 8938, because FBAR and 8938 are separate requirements often. FBAR is only one part of the story, because you may also owe tax on foreign income, and fixing reporting without fixing income can fail when IRS reviews that year. Form 8938 is filed with your federal tax return, and it reports specified foreign financial assets, not just bank accounts, so it captures investments and ownership interests too as well. The thresholds depend on filing status and where you live, but for many single U.S. residents, the trigger is $50,000 at year-end or $75,000 peak during 2025. For married filing jointly, the common thresholds are $100,000 at year-end or $150,000 at any point, and overseas thresholds are higher under IRS guidance. Filing 8938 does not replace FBAR, and filing FBAR does not replace 8938 because they come from different laws and carry separate penalties, and both may be required yearly too. Worldwide income rules mean interest, rent, dividends, and business profits from abroad must be reported on your U.S. return, even if taxes were paid overseas under U.S. rules for residents. To avoid double taxation, you may claim foreign tax credits using Form 1116 or use treaty positions when appropriate, but those tools still require reporting of the income and accounts. If you own a foreign business, you may also have additional forms, like Form 5471 or 8865, and those can affect both taxes and immigration timelines during your citizenship filing. Because these rules are complicated, the goal is not to memorize every form, but to recognize red flags and get help early before filing season ends and penalties become automatic. If you are a green card holder, remember that tax compliance also helps prove residence, because consistent filing supports your claim that the United States is home for immigration too. So, treat this as a safety routine. Track accounts, report when required, and keep copies, because future audits and interviews depend on documentation, not memory, but saved records, years later. If you are already late for past years, the worst move is silence, because silence looks like concealment when the IRS already has third-party bank data from FATCA matching systems. The best move is to gather records, confirm balances, and then choose the proper disclosure path, usually streamlined procedures for non-willful taxpayers who acted in good faith and lacked knowledge. Streamlined filing generally requires amended tax returns for recent years and delinquent FBARs, plus a written certification explaining why your failure was non-willful, signed under penalty of perjury with documents. Do not try a so-called quiet disclosure by filing late forms without a program, because the IRS can treat that as evidence you knew you were wrong and hid it. If you already received an IRS notice, streamlined options may still exist, but you must act carefully, because the fact of contact changes strategy and options may no longer apply. In that situation, you should consult a professional who understands both civil penalties and criminal exposure, because early communication can reduce escalation and can negotiate resolution based on your facts. Also remember that foreign account problems often include unreported income, so you may owe back tax, interest, and accuracy penalties. In addition, but credits and treaties can reduce you pay. Do not let shame stop you, because the IRS treats voluntary correction differently than deliberate hiding, and most immigrant mistakes are truly non-willful when people learn rule and respond promptly. If you are preparing for citizenship, fix taxes first, then file N-400, because submitting while unresolved can cause delays and dangerous questions, and can create record of inconsistency under oath. Think of compliance as cleanup before a spotlight, because naturalization puts your entire history on the table, and clean filings let you answer confidently when officer asks about foreign accounts. Now let's build your checklist, starting with inventory, because you cannot report what you do not list, and many people forget dormant accounts open to go for parents, weddings, or emergencies. Write down every foreign bank, every account number, every joint owner, and whether you have signature authority, because authority alone can trigger FBAR even if you never touch the funds. Next, find the maximum balance for each account during 2025 and convert to US dollars using a consistent method your preparer can explain if IRS asks how you calculated totals. Then add your accounts together and ask one question. Did the combined total ever exceed $10,000 at any moment during the year, including transfers, deposits, or seasonal income? If yes, file FBAR. If no, still consider Form 8938 thresholds, because assets may exceed 8938 limits, even when accounts stay under $10,000 through stocks, partnerships, or business holdings. Check whether you must file Form 8938 with your 1040. And remember, the threshold depends on filing status and whether you live in the U.S. on year-end date and peak. Next, review worldwide income. interest, dividends, rental income, and business distributions, because reporting accounts without reporting income can still create IRS problems during audits and citizenship checks for good character. If you paid foreign tax, collect proof, because foreign tax credits can reduce U.S. liability, and documentation matters when software or officers question numbers on transcripts, schedules, and conversion worksheets. If you are late, do not file randomly. Instead, evaluate streamlined filing, because that program can reduce penalties when your failure was non-willful and when you disclose before IRS contacts. Finally, store everything: statements, screenshots, confirmations, and copies of FBAR submissions, because you may need proof years later when applying for citizenship or if audits begin and your story changes. Now let's cover what to say and what not to say, because people lose money by calling the IRS in panic and making statements without preparation that contradict later filings. If you receive a notice, your first words should be calm. I received your letter. I am reviewing it, and I will respond through my representative after collecting requested documents. Do not guess dates, do not guess balances, and do not say you were never required, because the IRS will compare everything to third-party reports from banks under FATCA rules. If you hire help, choose someone who does international reporting regularly, not a seasonal preparer who only knows W-2 returns and basic deductions, because mistakes streamlined packages can be expensive. Also, beware of scammers who promise to erase penalties instantly, because no honest professional can guarantee an IRS outcome, and rushing can destroy defenses that are based on non-willful certification. If you are preparing an N-400, do not file until you have resolved back taxes or missing reports, because USCIS can request transcripts and ask hard questions at your interview. A common mistake is thinking you can explain later, but naturalization is under oath, and inconsistencies can be treated as false testimony affecting moral character. Even tax issues were fixable. If your foreign account was truly forgotten, you can often fix it without drama, but you must document why the failure was non-willful and act early before an official notice. Keep a timeline of what you knew and when, because intent is central, and a clear written story supported by documents can protect you if IRS questions your past non-filing. The goal is not to live in fear, but to treat cross-border finances as part of your American compliance life, just like renewing a license, because the rules follow you. Let's recap the 3 most important points so you leave this video calm and ready. The 10,000 test, the right forms, and early disclosure before IRS contacts you first. If your combined foreign accounts exceeded $10,000 at any moment in 2025, you likely must file FBAR, even if the totals dropped later after transfers, bills, or shifts. If you meet higher FATCA thresholds, you may also need Form 8938 with your 1040, and you must report worldwide income as required using credits and treaties to avoid taxation. If you are late, streamlined filing can help, but you must act before contact, follow the instructions, and certify non-willfulness truthfully and completely with professional review if you feel uncertain. For citizenship applicants, do not file N-400 until your reporting is corrected, because good moral character questions and oath answers can turn tax mistakes into denials that cost you years. You are not a criminal for having accounts abroad, for sending money home, or for owning property, and the law does not ban that it requires reporting when thresholds cross. What matters is how you respond now. List the accounts, calculate correctly, file the right forms, and keep proof, because future questions will come from IRS notices or USCIS interviews. If you know someone in your community with savings back home, share this message privately, because it can prevent panic payments, protect families, and keep immigration cases clean in 2026. Subscribe to US Policy Brief for more practical updates on immigration, taxes, and compliance, and like this video so it reaches the people who need it before IRS notices hit. I am Fernando, and this was US Policy Brief. Stay organized, file correctly, and do not let a forgotten account steal the future you earned for your family and peace.